Welcome to the Investor Panel, Building a Nature-Positive Economy. In this panel, investors will share their investment strategies encompassing nature-based solutions and the need for the standards to measure, monitor, and report intrinsic risk and impact. We are pleased to be joined by Stefan Hütte, Head of ESG at Munich Re Investment Partners, Damian Bayatakis from Head of Sustainable Investment at Barclays, and Erik Patterson, Head of Responsible Investments at Nordea Asset Management. The panel is moderated by Robin Miller, Manager, Investment Engagement, Water Team here at Ceres. Robin, I would now like to give the stage to you. Enjoy the discussion.
Thank you, Chantal, and I am so delighted to be moderating the first panel of the summit. As Chantal mentioned, I work at Ceres, a sustainability nonprofit advocacy organization based in the United States, working with some of the most influential players in the capital markets on building a more just and sustainable economy. At Ceres, I specifically focus on building the capacity for institutional investors to integrate water risks and opportunities into their decision making. So this is a really exciting session for me. Water and nature are vital to all life on Earth and are key links in preserving and protecting biodiversity. That said, water and nature are also key components to our economic and industrial activities. The description for this session cited the World Economic Forum, their estimate that half of the world's GDP, or roughly $44 trillion, is dependent on ecosystem services. But these same ecosystems are quickly degrading due to our human and industrial activities. For this session, we'll be unpacking investor perspectives on biodiversity and nature-based solutions. There are many ways to invest in nature because nature shows up in all that we do. Investment can be thematic. Investments can focus on specific asset classes, whether that be public equities, private markets, venture, startups, you name it. Sometimes it can take the form of public and private partnerships or conservation finance. We would need a whole day to address all the complexities of forging a nature positive economy, but my goal for you in this session with our stellar panelists is that you will leave here with a sense of the state of play around these important topics, and you may have a few action steps you can apply a nature-based or nature-related lens to your work. So before I introduce our speakers, I want to do a quick poll of the audience to gauge the level of knowledge in this virtual room. On your screen, you should be prompted in the poll section to be able to fill out a poll, and I think we'll be able to put up the results. Biodiversity and nature-based solutions are emerging topics, so if this is a newer topic for you, I'm glad that you are here. If you're an expert or often do work on these topics, please share your comments and your questions, and we will have time for a Q&A later in the session. So I know we have the poll. I think you can fill that out at your leisure there. That is now live. So I'm just checking in with the conference folks if we're able to put that poll up for all to see. And I think it's showing up on the screen there. I think I have to vote myself. So I think we'll just give it another moment here. It looks like there's a lot of folks here who are a mix of starting out. There's some who are looking to learn more. We have a few folks who this is a topic that you're often working with. So that's great. And I think that will give us all a sense, and panelists especially, of how we might be able to address all of these important topics. So I'm now excited to kick off, and we will do a round robin for all of our speakers. So you had a brief introduction of them, but I'll turn it over to them to share a little bit more about what they do, and also invite them to highlight a biodiversity or nature-based solutions topic that they want to highlight. We were talking in the prep call, something in your backyard or just something that you work with. So I'm first going to turn it over to Damien for an introduction.
Thank you, Robin, and a pleasure to be here today. My role at Barclays in the private bank is really working with individuals and family offices to help them to understand sort of the broader opportunity set around sustainable investing and help them think through what they want to achieve, as well as working with the investment teams to help to identify opportunities, although they're the ones doing the real work on the ground in terms of picking investments and finding those. And lastly, we do get involved with the pleasure to be able to get involved more generally in the ecosystem, joining great events like the Phoenix Capital Summit and others in relation to government efforts as well. And in that sense, let me point actually to some research that we are going to publish tomorrow, so hopefully not too much front running in terms of the point, but one particular stat that caught my eye. We do research every year. This year, it's about 303 families, family offices, and foundations. Average AUM is about 833 million, so reasonable size for private capital and private investors. And one of the questions that we asked was around alignment with the SDGs in terms of where investments were. And life on land and life underwater, to most related, I would say, ended up being only about 30% or under 30% of their investments had some relation to those SDGs, which is very different to when you're looking at good health and well-being, over 70%, and all the climate ones, well over 50% for many of those. And so I think you're seeing what is an interesting phenomenon, which is as important as nature-based solutions, I think we're recognizing, we're not seeing a lot of activity in that space. We do obviously have clients who are active in some cases, but at a scale basis, we're not quite there yet. And I think that's one of the important things that for us, to your question, we've ended up sponsoring Monaco Ocean Week last year and continuing to work with His Serene Highness's organization to help create better awareness of this particular nature-based or conservation-based or biodiversity-based topic. In that, when you're looking at it, the ocean economy would be the 7th largest economy in total. And we see 5 different sectors that are really critical or clear to opportunity sets for investors to be aware of in the sense of where there are opportunities to actually generate energy or fishing or aquaculture, plastics or tourism, where very clearly there are opportunities from a investment perspective, but also a really clear positive outcome from an environmental perspective as well. I'll leave it at there. I know everybody else will have their own interests and areas, and I'm sure we're going to get into an interesting conversation around any of them as such.
Thanks, Damien, and really great to hear a little bit more about what you do and with your clients. And so we will turn next to Eric from Nordea.
So my name is Eric Patterson. I run a 20-person ESG team at Nordea as management, and we're sort of grappling with how to make biodiversity and related issues into an independent theme. It's been one of our sort of strategic headlines for a long time. It's one of the very important pillars in the way we do our internal rating of companies for ESG scoring purposes, and whether those companies are eligible for investment in various types of portfolios. How we see threats to the environment and in some cases also threats in terms of the financial materiality of those biodiversity issues. But as I said, we're grappling with it. We know it's important. We feel very strongly that this is something that we want to integrate, but we're not quite sure to what extent we should separate it out, and to what extent it actually overlaps with say the climate theme and some of the other ESG themes that we're dealing with on a daily basis. And so it's an interesting time to be working with this. And if I can mention a few issues that we dealt with, one is the issue of land use and the effect on biodiversity of that, with a special focus on Brazil. There are two companies that we've engaged with in that context. The one is Vale, which we ended excluding from all of our products. So not even our Article 6 funds can hold Vale these days. JBS, I meant. And the other one is Vale, the mining company, which we actually ended up with a quite satisfactory dialogue with, and which we hold in quite a few of our funds. Not the ones that are labeled as the most ESG sustainable tilted ones, but still in some of the other products. So if there's time, I can come back to that later. How that engagement process can run, and what are the specific issues that we focus on in that regard. Thanks.
Great, thank you, Eric. Yes, and we will dive into much more of these details. So, Stefan, I will turn it over to you to introduce yourself and a bit about where biodiversity shows up for you.
My pleasure. Thanks, Robin, for the great introduction, and very happy to be part of this panel, and thanks for dialing in. So I'm the head of ESG of Munich Re Investment Partners. We are a new investment manager within the Munich Re Group. We put sustainable investing at the core, and to be quite specific, we are putting climate pretty much in the focus. Now, looking into biodiversity, I'm pretty sure we'll discuss the crossroads into climate change and also biodiversity, and as a dedicated investment theme. Now, what brings me to biodiversity, and also a bit of a story about biodiversity and Munich Re. So Munich Re has issued 2 green bonds in 2020, €1.25 billion, and another green bond this year. And part of those green bonds is that those are used for eligible projects, and projects include specific projects that include, for example, protection of ecosphere, sustainable agriculture, protection of forests. And I will get back later to that, and then because I think we will touch base on those type of investments in more detail. Privately, I think what's pretty interesting is to run your beehive, since we all know about the pollination effects of bees, and also bees as an endangered species. And I keep it at that. Thanks.
Thank you, Stefan. And well, now it's great to have the introductions. We covered so much ground in just those first few minutes to hear from the three of you. You have very different perspectives on how biodiversity and nature-based solutions show up. So Damien, I want to go back to you. You shared a little bit of how you work with your clients, but could you share a few more examples of some of those projects? I know we were talking about, how does the conservation finance really work with some of the clients and in the markets that you work with?
Sorry, Robin, could you repeat that? I lost the last. Could you share?
Sure. Yes, so just sharing a few examples of some more projects and kind of expanding on your introduction.
Okay, sure. No, happily. So just thinking about it, I guess if I think about ocean economy, actually one of the things that we've recently invested in on Barclays' balance sheet as well through our sustainable impact capital fund. So we set aside 175 million to invest in some of the entrepreneurs that we're seeing through either our unreasonable impact program. This one really interesting, doing work around concrete, ocean concrete that actually allows coral reefs to regenerate. Local eco concrete, really interesting company doing work in that space. Having a conversation in the moment with a client who actually somebody who also features in that report as well, about how to transition from a conservation finance community that is built on donations for sort of high-level species in Africa, around one of the largest nature parks cross different borders in Africa, to try to transition that into something that could be investable as well from a conservation finance perspective. We've had some really interesting discussions recently, actually, with clients around regenerative agriculture, particularly those families who are involved in farming or other agricultural products, forestry products, or sort of land use. I think to what, apologies, I think it was, remember, but Eric, it was you or Stephen who mentioned land use as one of the critical components, and thinking about how using regenerative agriculture actually will increase the valuations of land holdings that we'll have, as well as potential, I know question marks around voluntary carbon credits, but potentially to commercialize that as well through those systems. So I think it's a variety of different things where we're seeing individual projects is what I would say, whereas the big question ends up being, how do we do this at scale across all the different investment opportunities that we see or have?
Great, thanks, Damien. It's great to hear some more of those specific projects, and yeah, great segue to turn back to Stefan, just to hear a little bit more, I think, from where you sit as a reinsurer, how are the economic arguments around investing in biodiversity and nature-based solutions evolving? I know we were talking about, how do we value ecosystem services versus just broader ecosystem value? So would love to hear your perspective on that.
Sure, that's absolutely a key question. What's the economic/financial dimension of protecting biodiversity and conserving nature? Now, I got to repeat that figure that was stressed previously, and in the context, I'd like to quote a bit from the business case for biodiversity that the EU Commission has put out as part of its Green Deal. So again, this figure, 50% of the global GDP depend on a functioning nature. So roughly 40 trillion euros. That sounds astronomical, right? That is, first of all, I think quite remarkable. The EU states specifically 3 sectors that generate like roughly a total of 7 trillion of economic value add. So agriculture, food and drink, and construction. Who all depend on a functioning nature. So again, here, it's these sectors, but also they list like 6 more industries, including retail, consumer goods and lifestyle, aviation, travel and tourism, and others that whose supply chain heavily depends on a functioning nature. And those 6 sectors at 50% of economic value add of at least in the EU. And I think this is just so to say what's at stake. And when we talk about materiality, I like this other figure from the EU Commission that said already what have already been the opportunity costs of a decreasing biodiversity / reduced functioning ecosystem. And the EU states that between 1997 and 2011, so roughly over a time span of 14 years, between 3.5 and 18.5 trillion per year have been lost globally. So again, here, there's already an estimate to quantify the damage. And so in a nutshell, the last figure I got a quote here from this EU business case for biodiversity is also the link to climate change. And there's an estimate that means that on average, global mean crop yields of rice, maize, and wheat are projected to decrease between 3 to 10 percentage points per degree of global warming. Now, we already do have 1.2 degree of global warming. And the last one, Robin, since you asked me, so to say, translated into the context of the world leading reinsurance company, Munich Re. Also, here's an estimate by the EU that says like protecting coastal wetlands could save the insurance industry roughly 50 billion of annual flood damage. So again, here, all the points to listen in as an insurance company, but also as an investment manager.
Thank you, Stefan. Both some pretty sobering statistics, but also some encouraging ones. And I really appreciate how you outlined the business case and the financial case. So for those of you tuning in and wanting to get a sense of that, hopefully those are some resources that you can go back to. So changing gears a little bit, Eric, I know you talked about your work on stewardship and engagement with companies. Stefan pointed to a few of the sectors that are actually very dependent on nature. So would be glad to hear about how you apply active ownership in the work that you do. And you might need to unmute as well.
Am I back?
Yes, you are back.
Yes. Okay, so active ownership is really at the heart of what we do. It's one of the most important ingredients, if you will, in our ESG mix. We do practically all of our engagement ourselves. So we've got within our team 6 people who do nothing else but active ownership dialogues and voting. And the examples I mentioned before that are very, very closely linked to land use, to soil erosion, to other ways in which, at least in the long term, it's quite possible to quantify the potential loss, not just in terms of nature itself, but also in terms of foundation for economic profit in the companies that are involved. And I think what you have to do is go with the right questions. and not let yourself be fended off, as it were. Just keep hanging in there and engaging with these companies, and then make the tough decisions once in a while. And as I said, we have these two examples, both of them out of Brazil, where one we continued even though it's a case, and that's rather the mining company that it's not a popular company. It's not a company that is regarded as a pioneer in any way. And most of you probably are aware of the disasters that happened with tailings dams that collapsed in Brumadinho and the San Marco Dam. But actually, Vale did something. They changed their management. They paid restitution. They did the work, and I think heading out as well as a mining company that size can be on the other side of that. And then the contrast is another Brazilian company, a large company in the cattle industry, where frankly the dialogue didn't proceed in a way that we found credible, and where in the end we had to really cut ties with the company, and that meant that we can't invest, or we won't invest in it anymore, even for those funds that we don't market as sustainable. So I think it's also a little bit a question of how seriously do we take these things, and how much is it a feature only of a specific product range? Because when it gets really serious, then for it to be credible, it has to be something that where you take a stand basically across the product range that you offer to clients. And I know that's a debate because we all want to be as far as we can, everything to everybody. But I think there are areas where both on the climate side and also with biodiversity, where and human rights as another example, where you have to draw the line also in terms of what guardrails do you think there should be for your investment universe, to make sure that the end user, the clients who invest, and frankly in the end all of us have the kind of economic system and the kind of world that we want to be a part of.
Thanks, Eric. Yeah, it's good to hear a little bit more of a window into how the case study of these two companies in Brazil, but those broader considerations around how you make those decisions and how that gets down to your investment beliefs and your policies. And I also want to encourage folks, if you do have any comments or questions, we will be opening up for a Q&A in a few minutes. So we've already seen a few in there. Thank you. So feel free to take a moment as you're listening in to this great conversation to put your questions in. Yeah, Damien.
Just want to actually, it is one of the points made, I think is very well made. Natural resources have not been properly priced in the past, leading them to being undervalued and wasting them. Undoubtedly, that is the case, and I think there's an interesting parallel, but also a challenge with that, in that when we look at climate and how we have been able to start to price climate risk and opportunities. I know I was talking earlier about a lot of the opportunities, but I think fundamentally biodiversity at its fundamental core to the statistics that Stefan was rattling off earlier is a risk. It's fundamentally a global risk. And you look at actually the World Economic Forum, in terms of its risk report last year, biodiversity was in the top 10 in that sense. And I think people are starting to recognize it. But the challenge is assigning value to it, measuring it in a systemic way that allows investors to make decisions. What's interesting, I think, and you probably have seen this, Robin, with the companies you're working with, if you are there are stories and examples of, let's say, fizzy drinks companies that recognize access to water in relation to their own supply chain, but also in relation to community involvement and stakeholders needs to be maintained, and therefore the investment to ensure access to water for communities that they're a part of as employers or as corporations is critical. And I think they've recognized that on a very practical basis. I think the challenge for us as investors, though, and I think it is improving, is being able to take that and start to assign valuations to it to be able to make more informed decisions about what we do. I think we're seeing that in climate. Eric and Stephen, I'm sure, can talk more about sort of how they're doing that in terms of their climate ESG risk analysis. But I think biodiversity is a real issue, or an interesting one, in that the diversity, if you will, of the things that you potentially are pointing to that are fundamental to how we live are very hard to quantify in a simple or simplistic or simplified carbon metric way, right? How do you look at bees versus, whales versus, versus soil health, right? All of those things fundamentally or arguably are critical to investors, or should be, if you're looking at agriculture, or if you're looking at tourism, or if you're looking at these types of things. And I think we are only at the start of that process. Unfortunately, obviously, with the COP15 being pushed back, the progress on that is less, but certainly the Task Force for Nature-Related Financial Disclosures, I think, will accelerate that a little bit. But it doesn't feel like we're going to make as much progress. Now, as an investor, sort of what will we say? I think you still need to take those into account if you are looking at any of the sectors that Stefan mentioned earlier in terms of the sectors that we're looking at, even if we can't quantify them directly now, that fundamentally you're going to have to make some assumptions about how well, or engage with them, as Eric was talking about, how engage with the companies to see how well they are dealing with those risks before you make an investment decision, even if it's not going to be a simple comparison of who produces more tons of carbon per million of revenue. I think that's an interesting point to be looking at for investors.
Yeah, thanks, Damien. Thanks for kind of putting some of those pieces together. I saw Eric and Stefan nodding. So, yeah, Eric, any reactions to what Damien has shared?
I think Damien, you're absolutely right. It's the translation of the systemic risk, the numbers that Stefan cited at the societal level, at the country level. You can even do it. The London School of Economics and the Grantham Institute did something on some South American countries of the long-term risk to productivity and to the valuation of that sovereign debt from those countries, from soil erosion and other biodiversity issues, and then translating that down into the company and the portfolio level in a quantifiable way, so you can actually say that's a risk. And I think, honestly, I think there's going to be quite a bit of time still where we can't do that, and where if you restrict yourself to a purely portfolio risk point of view, then you're not going to take these things into account, because it's simply your investment horizon isn't that long necessarily as a portfolio manager, and your scope isn't that long. I think maybe it's easier for a reinsurance company because you're insuring a large part of the economy, so you get that flood damage right back onto your balance sheet, right? Whereas as an investor, to be cynical about it, if you own a company where one of their production facilities is say in Houston or somewhere that's flooded, or in Bangladesh or wherever it might be, that's not necessarily going to impact the share price in a material way, right? So I think we have to broaden our minds here a little bit and think also from the point of view of being such a large investor as we are, to say that basically we own a slice of the world economy, and therefore we're vulnerable to this across all of our portfolios. And that's the tricky part, that you're managing each portfolio with a fiduciary responsibility to the clients that have bought into that specific fund. But this kind of risk management has to happen across the whole firm, basically. And I think there are some conundrums there that we're still dealing with, and where we'll get wiser over the coming years. I hope it's going to be fast enough for us to be able to contain the damage, as it were.
I'd like to echo everything that was mentioned by Damien and Eric. What I'd like to do to the benefit of this panel here is also share the concrete investments that Munich Re did as part of its green bond allocation. So 500 millions were invested. As I said, like, this green bond is issued, actually the first German insurance company that issued a green bond, Munich Re. And the proceeds can only be used for eligible projects. And amongst them is sustainable water, eco-efficient economy, and environmentally sustainable management of living natural resources and land use. So all the topics we've discussed here in the panel. And there's 500 million were invested already, although the bond was issued, second half last year. One in Project Fauno Silva, and I keep the details. I spare you all the details because you can download the green bond allocation report from the Munich Re webpage. That's like a pine forest, sustainable forestry topic, and is going into that. The other is Project Dansk Demetra, invests in high quality farmland for cereal production in Denmark. Also here, interesting details. And again, here I invite you to look into the Green Bond Allocation Report. And the third is Project Pegasus. It's sustainable agriculture in Lithuania, that consists of high quality farmland, and organic farming is a key topic of the EU. So just to show, give some meat to, since it's an investment panel. So those are all I would call them kind of impact investments. I think some of the topics that were mentioned by Damien and Eric is of course, so to say, it's always in sustainable investing is always offense and defense. So to me, offense is impact, so investing for the better, and defense is risk mitigation. Yeah. So whether that's climate or in this case, biodiversity and ecosphere. And defense, I think is important, since we are fiduciary managers, at least on the investment management side of our clients' assets. So we got to identify financial and material risks, right? And biodiversity, obviously, if I'm quite honest, and I've been in sustainable investing for over 10 years, it's probably underestimated right now. So everybody's looking into climate, as we do, not only as a reinsurance company, but also as Vinegar Investment Partners as an investment firm. The EU, and I think, Robin, you were to come to that, is also pretty much driving kind of in a push, I don't want to call it compliance push, but all new EU sustainable regulation also reflecting biodiversity. So one is the famous EU sustainable taxonomy. So just to remind everyone, taxonomy is aimed to create a common language between corporate issuers and investors. Very simply said, the platform for sustainable finance just put out the criteria enhancement, including biodiversity criteria. So if you want to feedback to that, it's open till the 24th of August. It's quite technical. It assesses economic activities, in this case, with respect to protection of ecosphere and biodiversity protection. The other I want to mention is beyond the taxonomy, coming in through the principal adverse impact measurement of listed equity and bond portfolio. So what Eric mentioned, how do you look at corporates from like whale or others, or whale, I don't know whether that's pronounced correctly. But anyway, what you have to disclose in the future is the share of your portfolio where corporates do have a policy on protecting biodiversity. Now, whether there's data or not, I leave this open to the panel. But it's also coming in through those dimensions. So you're pushed into it, but I don't like much being pushed into it. It's more like the impact I'm interested in.
Thanks all. Yeah, it's good to kickstart that. Looking at the time, we've gotten a few questions in the Q&A, so we'll move to that. We also we have one poll that you can fill out as you're putting your question in, just to think through from all that you've heard today. What are the biodiversity or nature-based solutions topics that you think are most important? I'll press maybe a bit of a trick question, but we just want to get a sense of the audience who's in the room. What are you thinking from what you've heard is most important? And so that's up there. We can probably start to address them in the Q&A and maybe come back to the poll when folks have a chance. But there is a question to Eric on the Vale example, making a point that changing future behavior is one thing, but there are still 43 other uphill tailings mines that are just as vulnerable as Brumashindo. So how do you engage with the company on, fixing historical shortcuts before they're paying out, on future dividends, for example?
So on that specific topic, actually, that was one of the things that, or one of the core demands that we had, that they should join the tailings dam initiative launched by the Church of England and some of the AP funds, the Swedish national pension funds, which registers and monitors tailings dams all across the world. And they joined up on that, and that was sort of a first step. And of course, those have to be those have to be reinforced. They have to, to begin with, and they have to over time be decommissioned, and the solutions have to be found for that. And at least to my understanding, the company is actually engaged in that. So getting that under control, clearly that it's not that there's no risk anymore, and it's not that there's no I would put it that way, that clearly there's a residual risk, but demanding from an investor point of view, and that's where the fiduciary duty comes in again. That let's say you could be radical and say pay no dividends on you until you fixed all that. That would probably have a significant impact both on the share and the credits issued. And so you need to balance that, and the management of the company needs to balance that, and we have to evaluate in every case, do we think that enough is being allocated. It's a little bit a parallel to when you're dealing with utilities that are in a transformation process. You'd always like them to have a bigger share of their capex going to renewables, but they're not going to change in one day. They're not going to change. They're not going to close down their whole traditional generation fleet to the coal-based power plants that even the most progressive utility companies still own, most of them. So you have to be patient and realistic, I think, in these things, even though maybe you would like to see more progress quicker in some areas. I hope that answers the question.
Yeah, that certainly resonates from where I sit at Ceres, where we're supporting investors like you on, it's a dynamic space. And you do have to hold those multiple perspectives of making sure the company is staying economically viable while still moving in the direction of protecting nature, protecting people, all of those. We have another question that came in. I know, Damien, you talked to some of these pieces, but there's a number of public initiatives that are launching, the task force on nature-related financial disclosures. There's the upcoming COP15, specifically on biodiversity, but COP26 in Glasgow will also have a lot around biodiversity and nature. There's developments of the Nature Action 100. There's a pledge for biodiversity. How, for those who are in the room, how do you deal with somewhat of the information overload and figure out what to do? And I know we only have a few minutes remaining, so maybe Damien, if you want to go to you first and share your perspective, and then we'll go around.
Yeah, very, very quickly. I will try to be quick. So I think the potential information overload is a great point. You can, on any of these topics, get overloaded given the breadth and depth of any of them. And therefore, I tend to talk to clients and start inside out. So rather than going, what's the universe of potential options? What also I'm dealing more with private capital. What are the things that resonate with you or with your family or the particular interest that you have, either family business or family legacy, that are going to be related to the topics that you're dealing with. And that's obviously a good starting point, because then there tends to be a baseline knowledge or insight as well for these investors. That being said, we do, that's part of what the work that all of us are doing, right, in terms of trying to spot these opportunities, in terms of finding what's interesting or leveraging other people smarter than us, which I always love to do. Our investment bank put out some research on this topic recently and pointed to 3 things, just to give some examples that I think are cross-cutting. All of those things that you're talking about, when we're starting to look at, if we want to talk about scale opportunities or interesting areas, very clearly agriculture, right? Both in terms of the climate contribution and also in terms of its relevance to biodiversity or biodiversity relevance to agriculture, has to be an area that you look at. And obviously within that, there's a wide range of options. Second thing that they talked about was consumers. Actually, really interestingly, looking at sustainable consumption from consumers. As we are starting to think about changing how we live and how we work and how we eat and, what we consume, that opportunity set and consumers being willing to look at that. And I thought that was an interesting one. And the last one actually, is almost in the fundamental picks and shovels of doing this. I think there's a real interesting space, and I've had some conversations separately around geospatial data. And very clearly for those in the reinsurance business, critical, but actually thinking about how the same types of data and obviously geospatial data to be able to see what's happening on the ground is going to be incredibly valuable to investors to make decisions. So being able to work or invest or look for opportunities in that space, I think, is an interesting one to be able to get involved in as well. And I'll leave it there, but obviously many more potentially to include.
Yeah, but hopefully those are some good suggestions. I know, Eric, we were talking about how Nordea is thinking through what are the various initiatives you're thinking of getting involved with. So I invite you to share.
You mentioned the Biodiversity Pledge, and there's obviously a lot of them, both in the climate area and when it comes to biodiversity. And I think that there's, I'll be frank and say, there's a lot of work in assessing all of these and deciding how they fit together. And for us, the way to think about it, I think, is that all of it really points in the same direction. So this is all about companies having to learn to be profitable while absorbing or paying the cost for the externalities that they have, for many, many years been able to, I was going to say, inflict on the world around them without being charged for it, right? So the carbon tax, which in some form will come, is one example of that. And what the EU has been talking about of some kind of tariff for border taxation where you assess these things. Obviously, there's a risk that could be used for all sorts of other purposes, but in theory, that could be applicable to biodiversity as well. That if companies are seen to degrade the environment to produce the goods that they produce, well then somewhere some gatekeeper has to make sure that they're charged for that. And if the government and the places they operate is not going to do that, then the EU will take that responsibility. I don't know how it's going to work in practice, and clearly there are a lot of risks and misapplication and inefficiencies and what have you. But I think the overarching theme that externalities will have to be priced, and that companies will have to learn to be profitable while actually settling for the cost of those externalities. I think that's the important thing to think about here.
Thanks, Eric. And then Stefan, we've had a few questions actually come in for you around the role of trustees in issuing products like green bonds, and this may be a longer point than we have in the remaining minutes, but just thinking about risk mitigation motivation on moving inward from coastal or river flood zones. So to what degree do you want to answer that in a minute?
All right. No, it's great to see the questions, and that shows the the importance and so a lot of questions here. To be honest, let me start also starting point was initiatives. So Munich Re Group currently is not part of any of the big biodiversity initiatives. It's monitoring and looking into that. The discussion with the colleagues, that's outside of my own remit here. I think the task force nature-related financial disclosure is an interesting one. If I summarize it in my words, it's the biodiversity cycling of the TCFD. And with the TCFD, we all know how much that accelerated also the climate investing for corporates and including insurance companies and any asset manager. I think technically speaking, I'm pretty sure that in the underwriting and insuring risks, you will and do look at those risks in a holistic manner, right? Whether it's flood risks in any case, because Munich Re, is as a reinsurance company in climate investing for more than 4 decades, actually probably since the beginning. It was founded in 1870 or something. So it's at the heart of insurance underwriting. But right now, cut it short, because I think we're running out of time a bit here. The predominance is really climate with Munich Re. So it's member of the Net Zero Asset Owner Alliance, member of the Net Zero Insurance Alliance. And then the question is, how much can you digest with a level of quality? And we'll see.
Thank you. Yes, I think that brings us to time. So a very warm thank you to all of our panelists. I hope you're leaving the session with some really great initiatives and research to look into, and hopefully the inspiration and the motivation to take action on biodiversity and nature-based solutions. So thank you all for your time and attention, and I'll pass it back over to Chantal.
Thank you, Roman, and thank you all for such an enriching panel discussion.